Hello, good afternoon from Nigeria here. Okay, I'm recording this video around 11:29 a.m., which is 4:29 p.m. in Nigeria. Okay, as we all know, New York session is coming to an end. So I wanted to show you, all right, the trade I'm looking at this week. If not the trade I have taken already this week. So this week I'll be focusing on Euro USD. Remember what I always post on my status, what I always tell you guys, that less is more. I don't need to start looking at all the pairs in the market, looking at them all to pick or to trade all of them. What I just need to do is to look for one pair that is ready for me, take the trade, rest, and wait for it to play out or hit my stop loss. So I'm going to show you my thought process on this Euro USD that I took. For those that watched the video I made yesterday, I showed you guys how I caught this trade. Okay, how I caught this trade, this particular trade here, 1, 2, 3. So the trade I'm calling trade on now is this short trade. And I will hold it till this place. So I'm going to explain why I took this trade. But for those that didn't watch my video yesterday, why I took this particular trade right here on this trading view was because we have left shoulder, then we made higher high, higher low. It's as simple as that. Market made its morning start. So the first trade is there, the second trade was there. So I explained that yesterday in the video. So today, like I always say, before you do your trading or before you enter a trade, you first of all do your top-down analysis. This video is going to be very short. Okay, I'm not going to waste much of your time. So on weekly time frame, like I showed you guys yesterday, market was making a whole lot of higher high, higher low, higher high, higher low, higher high. The market made a lower low here. Like I told you guys yesterday, whatever that happens between here and here are just market structure. Okay, there is no important move. There is no breakout. So all these things are just market structures. Just like I explained to you guys yesterday. Okay, so on this is weekly is bearish. On daily time frame, I told you guys how we marked it. Okay, let me just mark from the peak here. I have higher high, higher low, higher low, higher high. Then all these are market structure. All these are market structure until we form the lower low here. Immediately we had our higher high, higher low, higher high. Market structure, we came down, broke out, made a lower low, lower high, and lower low. Okay, like I told you guys, I'm going to explain a lot of things on this video. Just pay attention. First, this is the first thing you are going to do while trading. First of all, know the direction of the higher time frames. Okay, now on 4-hour time frame, because I have read this already, you guys know that we are making a whole bunch of lower low, lower high, lower low, higher high, higher low, higher high, higher low, higher high. You can see this small move here, higher high, we broke it and formed a lower low, then lower high. Okay, we see a small line, a small box I put there, I will tell you why. Okay, now all time frames are in sync. All time frames are in sync. So I will do this bearish. All of them are bearish. I will give this 30%. Each time frame, weekly, daily, and 4-hour, I will always give them 30%. Okay. So the next thing is to check my area of interest. Since we are bearish on all time frames, where I picked mostly my area of interest is on daily and weekly time frame. Okay, I pick most of them on daily and weekly time frame. Okay, so this is weekly time frame. I have the first touch here. okay, second touch and third touch. So almost the same place that we are having our daily. I have my first, second, note the AOI, the area of interest is not too clear on weekly time frame. So I mostly like using daily personally. Okay, if you check daily, you can see, oh, the weekly, this thing is far. It's far, okay? So I don't like zooming out my chart. I love to see everything boldly. So let's zoom in, okay? So right here now, we can see that we are having our resistance here, our support and our support. And we are waiting for market to do a lower high on daily to go below. Okay, so our trade now, if maybe you want to use Fibonacci, okay, we just put it here, as simple as this. Now market, our AOI is around 50%, and this is an engulfing candle. So our target will come down to this place. But I will also show you how I pointed my take profit, okay? Because less is more. I can put my take profit here, but that's by the way for now. It's not part of what we are doing. So my AOI, which is my area of interest, I'm going to mark it. This thing should go to the right immediately. Can we push this to the right? Okay, so my AOI is there. Okay, my AOI, which is area of interest. Area of interest, I give it 10%. Always. AOI. Market testing AOI. Yes, I give that 10% too. Market now is at area of interest. Testing area AOI. Yes. Okay. Previous market structure. Testing previous market structure. Previous market structure is yes, I give it 10%. Previous market structure. What is the previous market structure here? The previous market structure here is this point. You know, this is the last, this is this is the last lower low, lower high, and lower low. So this is the last zone we broke. So yes, we are having that right there. Okay. Okay, so I have all these things marked up here. Let me not just waste my time. This is my confluences of taking my trade. I'm going to learn a lot from this. Just pay attention. Okay, so this should now be confluences to go short. This should be confluences to. If you watch this thing I'm doing here now, you are more or less watching a premium course from Leo the Billionaire. Okay, this is my conferences to go short. Conferences to go short. Okay, we are bearish. You see how I mark them. We are bearish. We are bearish. Smart people will get this info and use it for their advantage. We are bearish. So AOI, that is area of interest. Yes, we are at AOI. I've explained that before. EMA, where is EMA? I use EMA 50 for this, mostly on 4 hour. Okay, let me just remove this and put EMA. Let me put indicator quickly. EMA. EMA is exponential moving average. Moving average exponential, anyone you want to call it. So I use 50 EMA. Okay, 50 EMA, simple. So I don't check EMA on daily time frame. I check it on 4 hour. So if market is retesting it, I don't know. So now we are at area of interest. That is number 2. I gave it 10%. EMA, we check it on 4 hour. Is market testing because we want to go short? Is market testing it from from under or from below. So our EMA is 0. No, EMA, we don't have a confluence on EMA. Candlestick rejection from EUR. As we can see, we tested the area of interest on Friday. I'll be okay. This is Monday. Today is Monday. Okay, we tested it and we rejected. This is an engulfing candle. Even on daily, you can see we rejected. We rejected it on Friday, and we are still rejecting it today. Okay, so yes, there is a rejection. I give it 10%. This is how I form my confluence. We don't just come into the market and jump into a trade. No, you don't do that. The test of the previous market structure, I have shown you guys before. This is our previous market structure. This is the last lower low that better this new lower low here. So yes, we are testing it. Like this trade is an April. Anyway, let me not say anything first until we finish. Round psychological level. Round psychological level is, I use mine from every 500 and 1000. So what I just need to do is to just throw in a line inside my area of interest, then go to this D2. So I have 1.07. I will now put 1.0700. No, it didn't give me anything. I will put 500. Almost, but I won't use it. I won't use it, but it's almost though. It's almost, but I needed it to be inside this place to call it and you can see market respects area of respects all these psychological level. You can see that market tested let me label it. I will just leave it there. Okay. If we mark our AOI from weekly, that thing we enter the area of interest. But I don't want to adjust my chart. Okay, if I want to get this place, but it doesn't make sense. Let me just leave it there. Okay. Let me reduce that side. This B Pro, and it should be at the top. Okay, it should be 14, Mr. Man. All right, so our psychological level, you can consider, can put it 5% trans psychological level. So this is what you needed to do on the higher time frames. Okay, now if you now want to take a trade proper, we have entry signal, entry signal. Okay, you see how you form your confluence before taking a trade. Most of your mentors don't teach you this. You just jump into the market, look at the market, and take any trade you want. No, you don't trade that way. Let me show my face. Let me show my face so that I will be singing this. I'm coming. Let me just wear small something on my body. Right. All right, let me show my face so that I will just give you these more psychological tips. All right. So what I'm trying to say is when you come to the market as a trader, you don't just jump into the market. You're supposed to have a series of confluences you are looking at. You see how we are building confluences for this EU. And remember, there is no holy grail in the market. Some people will tell you that their strategy is the best. There is nothing like that in trading. What you need to do is to have your confluence, follow it, enter a trade following your confluence. You might lose the trade, you might gain the trade. But make sure that your strategy, this is not just a strategy. What I trade is pure price action. Pure price action. Okay, so if you are getting 1:2, 1:3, and you could be able to make 70%, like your strategy is working 70%, in the sense that whenever you take 10 trades, you are going to win 7 trades. You are profitable. Let's take it. Let's say you have a $1,000 account and you are risking $100 on each trade, for example, and you took 10 trades. Okay, you lost trade. You lost how much? You lost how much? $300. Then you won 7 trades. Let's say your risk to reward on each trade is 1:2. You made 7 times 2, which is how much? 14, right? 7 times 100. 7 times, you are risking $100, then you won 7 trade. And each trade you won is $200 because you are risking $100 to get $200. 200 times 7 is 1,004, and you lost how much? You lost $300. 1,004 minus 300 is how much? $1,100. So you don't even need to be afraid of losses. Just follow your trading plan. Stop looking for 100% winning strategy anywhere. There is nothing like that anywhere. Okay, just make sure you follow your plan. Like this trade I'm explaining, I'm still going to journal this trade. Whatever the outcome is not my business. My business is following my plan and taking a trade that is before me. That's final. So let's continue. We are done with the higher time frames, okay? So now if I want to take a trade now, what am I going to do? So look at what I wrote here. This is just a premium whatever, okay? So I'll just wait for shift of market structure in either 1 hour, 30 minutes. I use 30 minutes mostly, or 15 minutes. Then that will be 10%. And again, engulfing candle. I look for engulfing candle, either bullish or bearish. Since this is a confluence for short, I'll be looking for bearish engulfing candle or evening star during London session or New York session. Less is more in trading. It's not about staying 100 years in the market that will give you money. It's staying in the market and doing the right thing. You can trade and have a lot of time to draw the things. Okay, like now I just finished writing 235 exam, 235 questions. Okay, I just finished it. I don't know whether and I don't need to show that. Okay, so that's by the way. So since we are done with the higher time frames, what will we now do? We just go down to lower time frame. So as you all know, for those that watched my video yesterday, I'm gracious enough to show everything I do. So most times, if I want to take a shot, I'll just look for head and shoulder if I'm looking for short. And I have a clean head and shoulder. Let me minimize me. So I told, like I said before, I mostly take my trades from 30 minutes time frame. Okay, so what the next thing we are waiting for now is to see a shift of structure, which is very important. Once you see your shift of structure, you wait for market to do what? I explained something yesterday. Go back to my video to see my approach on inverted head and shoulder. The first trade I took last week, like I showed you guys there, this particular trade. Okay, that's inverted head and shoulder. Go and check the last video, the one I did yesterday, to see how I took this trade. I'm sincere enough to tell you how this market is working. All right, market is designed, so how you are using technical analysis to do trading. You should focus more on price action. Stop trading like Access Bank and UBA. No, stop trading for validation. You are here to make money, to help your family, to help your loved ones. You know, I know some of you have girlfriends and some of you have boyfriends. You need money to take care of them, buy them gifts and all that. Okay. So with that being said, we are now on 30 minutes time frame. Okay. So on this 30 minutes time frame, as we read our market structure on higher time frame, that's exactly what you are going to do here too. Okay. So this is our higher high. What's that? What's wrong with my network? I love zooming in. I don't zoom out my chat so that I'll be seeing everything clear. It's like network don't do some sound. Let me remove this proxy. Let me off my proxy. Right. Okay, so I think that's the problem. Okay. So let me delete this. Okay, so what I do here is we see this higher high, higher low, higher high. We had our lower low here. And what? Our lower high. You always, if you are looking for buy, you buy at higher low. When you are looking for sell, you sell at what? You sell at lower high. It's as simple as that. So the last conferences we have here is showing you what? Entry, shift of market structure. Okay, so on this 30 minutes time frame, we are once bullish. I know we are looking for short. Then we made higher high, then boom, we made this. What's the name of this? That's a lower low. Okay, so the next thing you are looking for here now is for market to come up. I have shown you how I use my what is it called? My head and shoulder and inverted head and shoulder. Sometimes I do use entry on this trend line, counter trend line to enter my trade. But go back to the video I did yesterday to see how I took this trade. It will show you how I took this in the morning. Okay, like I told you before, I look for shift of structure. Shift of structure is here, which is 10%. And then I have a morning star engulfing candle, morning star, evening star. I mean, I had a beautiful evening star here. Okay, let me check. Okay, so I was at the gym when the market was ready. I took this trade from 1 hour time frame. Okay, that's why it was there. Okay, even on 1 hour time frame, we had our beautiful evening star too. So this trade to me, it is ready, it is valid. That's why I took the trade. Okay. So whatever that is happening in the market, I was busy doing other things. I just wanted to record this video so that by the end of the week, I'm going to maybe journal it. That's it. And why I took short is because the higher time frames are what? Bearish. So trend is your friend in trading. Very important. So the best place to enter this trade now is to enter. Now remember, this is our area of interest. The blue line, I be the green. Pardon me. You know the color. If you don't know the color, that one is your business. It's not mine. All right, so if you want to take this trade now, you can take this trade from here. Okay, your stop loss should be above this structure. Then because this thing came up there, you can now put your take profit here. This is 1:3. 1:3. Even if you lose the trade, you wait for another beautiful trade. Less is more. You know, you trade like a professional. So with what I did here, okay, this is where okay, how did I put my take profit? How I put my take profit is because everything is in sync. I first of all this is my first take profit because I have resistance, support here. It's a valid zone where I believe market is going to respect. That's why I put my stop loss there. So let me go to where we're analyzing, mark it out too. I'll use line, just put a line there. Okay, and if you are trading, another thing I believe your mentor didn't teach you is that you are going to use Wanda to analyze because their chart is cleaner. Okay, so I will just put line here. You can see 1, 2, 3. You can put a box because you are drawing a zone. Okay, you can see our negative 61.8 is almost there. So, Chikina, we're going to wait for this trade to see whether it will come. Yes, I will put it this way because it's a probabilistic market. And I believe I have poured out my mind and shared $100 million trading confidence and strategy to you all. And I believe you're going to calm down since a lot of you can't pay for mentorship. Use these to help your life. Okay? So I will draw a curtain of this video. See you next time. Bye. I have a wonderful, peaceful week. All right? Thank you.